mortgage and more than that.
Absolutely. I forgot to put the recording on this on the Zoom, but now it's recording. So we're gonna record the videos. If you're missing the beginning of the end of these videos, just make sure to contact us. We're gonna share all this information. If you don't have the time to be in this Facebook or Zoom event, just make sure to watch the videos. We're gonna host it also on YouTube. We're gonna
mainly we will upload it to the YouTube. If you just Google it, our name. I believe you Google your name. I think they can search your email.
Yes.
Yeah. Yes. So we are searchable. We are a public figure. So feel free. And during the time, either you can type out your contact information, like your email address, so that we can reach out to you. Please put your questions during the session. We try to answer all the questions if possible. If not, don't worry. We'll reach out to you, right?
Yes, absolutely. Today, we're going to talk about something really different. There's probably a few videos out there about all these out-of-the-box mortgage. And that we talk very often is why nobody else is doing these kind of loans, right? So,
hi, Luis. Welcome.
Welcome to the webinar, Luis. Thank you for joining this, and thank you for all the people from Facebook Live joining our webinar. So, in the past videos, we were talking about all these loans that are fitting in one box, like conventional loans, VA loans, FHA, etc. There are some loans that it doesn't fit in those boxes.
I have many experiences.
So there's many of them. We can name few. We just across one of the close experience with one of your clients, Chris.
Exactly.
You want to talk a little bit more about that experience?
Yeah, we're gonna cover in detail, but that is, as you mentioned, normally conventional loan or well-known like FHA does not work for the particular case, like self-employed person. He has, the tax record is not enough to supporting to make it happen. But because thanks to the Jose, he bring it out a good idea that the non-QM loan, but we're going to talk about it. Don't worry about it. Don't worry about the terms. But good news is he has more options. And then good news is he has a lot of experiences on that. He can lead you to. So we're going to talk about it. Yes. So he always saying, don't disqualify yourself in terms of loan. What does that mean? What you are trying to tell the folks about this?
One of the biggest, I'm going to say one of the biggest problems when I'm meeting clients is that they are already disqualifying themselves. They say, I actually don't qualify for the mortgage, and they are like giving up already. So you don't know if you qualify for something if you don't explore the options. Every single lender out there has different boxes, different ways to do loans.
Really true. Yes.
And every single loan officer, not only the company by himself, also the loan officer has different experience.
Exactly.
So that's very important. That's why I always encourage people, do not disqualify yourself, because you don't know until you explore more options if you qualify.
Exactly.
Or maybe you don't qualify now, but probably in 3 months or 6 months.
Exactly.
Yeah.
That's one good example. I know one mortgage lender, they're only dealing with conventional loan and FHA loan only. So meaning is if you're dealing with them, you have a limited scope. If you're not qualified those two options, then you think, I'm not, qualified. But through him, we're going to talk about non-QM, other loan, like VA loan, USDA loan, and many other different options. Then you can make a check boxes, right? Whether I'm qualified this option A, B, C, D, and more options on your table.
Yeah.
Right?
If you're watching this video, if you're a business owner, and if you have a low credit score,
Mm-hmm.
if you have an IT loan, an IT number, and if you've been declined with another lenders for any reason.
How about the work visa status?
Work visa status.
Like L1, E1. Okay.
This video is very important for you. Don't leave us. All very good information. So we're gonna cover different things. Those are the topics. It's very important for you to understand what is a non-QM, right?
Yes.
There are some things that we're gonna cover in the next slides, but
Mm-hmm.
a non-QM
Mm-hmm.
meaning a non-quality mortgage.
Mm-hmm.
That's the title, but it doesn't mean that it's not quality. What it means is that it doesn't fit in that box that we were talking about, right?
Mm-hmm.
It doesn't fit in the box of Fannie Mae, Freddie Mac, Ginnie Mae, conventional FHA or VA loans. If it's in totally different box, right? That's why the industry call non-QM, but we call it creative mortgages. So that's the title. Yes. That's the title that we place, and that means that we can use different strategies to make loans happen. We can use bank statements. We can use low FICO scores. We can use cross collateral. Many other ways to make the loans happen. Asset depletion. That's another way to do it. There's different options. We're here in Austin, Texas, and for people that join a little bit late, I'm here with Chris. He's a real estate agent. My name is Jose Puebla. I'm the loan officer, and we're talking about non-QM and many opportunities that we have for you.
Yes, thanks for the restating that. Yeah, for the latecomers, once again, this is a great series of real estate information seminar for all of you audience who are looking for real estate, buying a home or selling a home whatsoever, and we are here for you. So we're gonna provide invaluable information to you guys.
Absolutely, absolutely. So remember, business owners, really important. We have products for you. That's one of the biggest product that we have, right? Bank statements for business owners. So we're gonna answer all the questions at the end of this presentation. Very important to understand the market.
Yes, it's a general stuff. So we're gonna talk about general stuff for the audience first, then we go to specific topics. So this is the latest information in April from the Austin Board of Realtors. So this tells us Austin area market. You don't need to see everything, but all the statistics shows Austin market itself very hot market.
Yeah,
we feel it every day, and many people is moving in. And very important, the key parameters on the right side bottom corner, the inventory level. And normally the 6 months, the inventory is a fair, the demand and the supply. But the 2 months, 4 months, meaning is, and supply is not enough. So more buyers in the market, meaning is, many cases, we ended up a multi-offer situation.
Correct, that's very often.
And very strong seller market.
Yep.
So that's a good information. The second thing is, let's talk about a little bit of sellers, the position. In Texas, overall Texas, this is a Texas Association of Realtor information, and motivation, because they want to sell the house because of retirement issues. They have a family situation. They have a job issues, a lot of job relocation issues. They want to move to the closer friends or family. So this is a top 5 reasons why they want to sell the house.
Correct.
And this is, these steps are many asking, I want to buy a house, but what's the typical process? So this is a 1, 2, 4, a lot of related to the financing. Can you talk about a little bit of step 1, like a down payment, credit score, and pre-approval, why that's important?
For the folks that you're watching this in the Facebook Live, don't worry about the screen. You're not seeing the screen right now, but we're going to share this link and also the presentation through Zoom as soon as we record this. Then you're going to be able to see the presentation. So very simple. from the beginning, you need to know if you qualify.
Correct.
Right? You need to know what is your FICO score, what is your potential of, maximum loan amounts, if you qualify for FHA, conventional, or any other programs. This specific video we're going to talk about non-QM. So that means that probably you don't have the perfect FICO score, or probably you don't report in everything on your tax returns, but you have enough income in your bank statements. Or there is another options out there where we can strategize and make your loan happen.
Exactly.
That's basically this 1 to 10 steps. So basically, start with a free consultation with your loan officer, get pre-approved, know the product that you're getting approved, and also your monthly payments and all that. Then start shopping.
Yeah, but don't worry about it. So you don't need to be a financial expert. He is the one. So, but all you need to do is know someone like a realtor who can link you to the right professional counsel like Jose to find your best loan option.
Correct.
To maximize your maximum potential. But the pre-approval, that is important because you pre-qualified. Then once you find the ideal home in front of you, we can make an offer. Without a pre-approval letter, seller won't accept an offer.
Correct. So those steps are really important. And also, another graphic is about the interest rate. We still have an amazing interest rate market. The lowest interest rate in the history.
Yes, surprisingly. So father generation, so back in like 1982.
1970s.
Unbelievable. 18? It's a 2-digit. Can you imagine? So many people asking, Chris, when is a good time? So, father generation, they bought a house with the interest rate at 18 points.
Yeah, crazy.
Can you imagine that?
And they bought it. So, and right now, probably those houses are free and clear. And we're going to talk about that. Let me take that simple. Let's think about that particular scenario, right? You have a family member who bought a house in 1980s, 1970s, in the later 1970s. They paid 2 digits interest rates, right?
Yes, almost 20.
By now, those properties probably they are free and clear.
Correct.
Right? Because they refinanced and they paid off and they did a lot of things on their mortgages. And at the end, those properties are free and clear.
Oh, but this is, I think we are just covering up. This is a good example why we may need a refi later.
Correct.
If you, fix 30 years, starting with the 18 point, doesn't mean you have like locked. But once you get a lower rate situation like current situation, is a good reason why you may consider refi option, right?
Everything is about the numbers, right, correct, Chris? And everything is about also the cycle. So mortgages, economics, financials, everything is about the cycle. There's different cycles in our life.
Correct.
So if we understand the cycles, you can take advantage of those cycles. What that means is then you can buy a property today, let's say with 5% down. I mean, with 5% interest rate. Tomorrow, we don't know, but let's say then interest rate drops, I don't know, 10 years later or 5 years later or 3 years later, who knows? You refinance on 3%.
Yeah, this is a beautiful example. Yeah. So why wait?
Yeah.
So it's historically low enough. So you can, start from there. But whatever reason it goes down, there's another chance for you to consider another alternative options.
Correct. So the sample that I was talking about the free and clear properties for one of those QM loans. So I have this scenario in Washington State where this family have this property free and clear, and they were trying to buy another property, but they didn't have enough income on taxes. So long story short, we use that free and clear property as an asset, as a gross collateral. So we lend to that person based on that collateral to buy another property without using the income.
Yes.
That's one of the non-QM loans. And that's amazing opportunity for this investor because now he's becoming an investor and has a rental income, cash flow. So it's been a great opportunity.
Yeah, don't forget, not every lender can do that. Some lender has a limited option, but some lender has all the options. Okay?
Yeah.
And purchasing power, why that is important? Because I'm dealing with a buyer a lot, and he gave me a good insight. Jose gave me a good instructions. So if interest rate goes 1% higher, meaning your purchasing power almost like 11% reduction, meaning is you qualify like $300,000 worth home today. For whatever reason, the government hike 1% up, you only qualify $270,000, 10% reduction, meaning it's totally different neighborhood.
Totally different. Yeah, absolutely. So don't wait. Don't wait. The opportunity is right here, right now. To answer the questions that you always have is like, that your clients ask you, when is a good time? Today is a good time. So don't wait. Mortgage options, just very, very fast. Conventionals, FHA, USDAs, VAs, down payment assistance programs for 100% financing. And today's topic, non-QM, which is the non-qualified mortgage or non-quality mortgage. So we're going to talk a little bit about this case.
Yes.
We have this case study. It's a self-employed, right?
Yes. Because in explaining this actual customer case, then give you the idea. So this case, my current client, self-employed, and tax record, he has a tax record, but 1 year is missing. Actually, he's working on a CPA, updating, so it's not fully ready. And then he has a good cash reserved, but is not, he can qualify a little bit lower loan amount. So again, mostly you'll qualify the loan, let's say a small amount, but it's a matter of, is it good enough for the purchasing your ideal home, target home, right? Correct. So this particular case, he can qualify $300,000 worth through the conventional with the current status, but he cannot find his ideal targeting home, right? But through him, right? Can you explain about like 400K?
Yes. So analyzing the situation with this client, we were able to put this client in a 400,000 property using bank statements. That's huge. The client wasn't actually full understanding the program. Say how is that possible? Well, we used your bank statements if you're a business owner. That's only for business owners. So we do understand that many of the business owners do not declare everything, and everybody knows that. So we use your deposits in your bank statements based on, we use different calculators to analyze that. So that's only one little case scenario where we can actually increase the loan amount from 300,000 on conventional all the way to 400,000 with a non-QM loan. Now, what is the difference in reality? Probably the interest rate, it will be a little bit higher. Probably the down payment is a little bit more than conventional, but at the end, the cost benefit, we always talk about it, right? What is your cost and what is your benefit?
Exactly.
Your benefit will be higher all the time. Yeah.
He was really tired of finding his ideal home because the 300,000 budget is really hard, extremely hard in Austin area, the limited budget. But 400,000, he has multiple options on the table in the market, many available homes. So now he is happy. And also he may in the future, he mentioned to me, asking me a question, he may consider refi option whenever he's eligible for the lowering his interest rate in the future.
Correct. There's another programs like, for example, asset depletion. There are some investors coming to the States trying to buy houses, but they don't have a job, they don't have a credit history, they don't have what many people are, creating based on the years here in the States. So they can actually use whatever assets they have to be able to qualify for some programs. So that's another example that we have for non-QM. We have the ITIN programs, foreign national programs. Again, bank statements, that's the huge one. Bank statements, foreclosures and bankruptcies. So people with foreclosures or bankruptcies, we have programs. Then if you are declaring PK today, you can start buying tomorrow for a property. If you go with conventional or FHA, you need to wait years to be able to make that happen. But with non-QM, the next day you can qualify for that. So very excited.
This is all the legal program, but it's a little bit difficult to make it proceed because of different outside the box. So that's why not every lender do it. Okay. And even some lender I know, they said this is difficult, so they decided not to do it. Okay. But luckily, Jose, the company, and he himself, he has some own experiences. He know how to do it, make it happen.
Yeah, that's so true. Even, experienced loan officers, they don't want to deal with these kind of loans because they're difficult. I mean, they're difficult. You need to put things together and requires a lot of time and a lot of effort. But that's why we're in this business, right? Yes. You want an easy loan? Hey, just be sitting on your desk and I don't know. Good luck with that. We do also easy loans as well. I mean, we do take conventionals, FHA all the time, but we go extra mile. We go beyond the normal. So that's the difference between a loan officer, a transactional loan officer versus a loan officer who cares about your business partner, your client, and your future.
Yes. So once you have any bad experiences, disqualify from your bank, the traditional bank. Don't limit yourself. What I'm talking, because they have only limited options. So that's what we're talking about all the time here, right? So little bit of seller advantage, because sometimes homeowners are participating in this kind of webinars. But even if you're a buyer, once you buy a house, you're a home owner. So you are more seller's position. So I want you to convey this good, important messages. You have many advantages. Okay, this is a seller's market. You have a lot of advantages, but in the tax advantages, like a homestead exemption, one good example, I'm homeowner too. I'm saving at least $400 as a status of primary residence for my current home. Okay, so if you're filing for homestead, if you're leaving your property as a primary residence, then you qualify for that. So let's say you pay like roughly $9,000 annual taxes. Probably you're saving that range, $400. But if you are more 65 years old, you can save up to closer to $1,000. Right. So that's a huge advantage. So you can apply for that. So of course you can get that help through me and other realtors who understand these processes.
Right. So I was just getting closer to the Facebook Live. If you guys have any questions, there's a lot of information that we would love to actually share with you guys. But we want to answer questions. We want to answer any questions you may have right now. I'm going to get closer because there's a lot of people writing.
Some questions there?
There's some
questions how about there. This? We will, as soon as finish this slide here, we will get the Facebook questions. If we can answer within the time range, we can answer all the questions.
Yeah.
We can do that. If outside of time's limitation, then we can come back through the other session or reach out to you individually.
Correct.
So we already, time spent already. But another way is, as a homeowner, if you sell your property, your gain, there's a huge tax on it. But good news is, if you are a primary resident, then you can save up to $500,000 on gain, okay, through the transaction because of IRS code section 121 as a married couple status. So that's another tax saving too. if you have a profit on transaction. But if you want convert your primary residence to bring tenants for investment property, you can defer tax using the IRS code section 1031 exchange, and you can defer your tax, the payment through that existing IRS code. It's a heavy topic, so I'm thinking of inviting a professional who can cover this topic, hopefully next session or like 3 or 4, mention a little bit of that cover this topic.
Yep.
But can you mention a little bit of refi? What is the benefit on the refi when they have to consider refi option?
Well, let's talk about the same case study. This client who is a business owner who qualified for bank statements, and he's putting his business in the right position to be able to qualify for more loan amounts for the future. So the answer to this client was, get your loan now with this program, with the new no QM loan. We use 24 or 12 months bank statements, either or. And we also help the client to prepare for the refinance for the near future. So this client is doing 2 things at the same time. He's buying his house for the price
whatever he wants. Whatever he wants. Yes.
For whatever he wants. And second, we are helping the client to be ready to prepare themselves for the near future. So they can refinance to a conventional loan with different terms and conditions.
Good news is you can do both options through the same company, same guy. You have all the options on the table.
So refinances has different options. We're right now I'm helping two families. One is to buy another property. We talk about your case. There's a client who's refinances and he's planning to use part of that money to buy a property. So he's becoming an investor now, which is great because now you have your own property plus another investment property. There's clients who wants to do some improvements in their homes. So you can do some improvements in your homes. There's another needs for refinancing. There's people, they want to send their kids to college.
I love that. College fund, right?
So everything is about creating wealth through real estate. So if you understand the term creating wealth through real estate is leverage. This is one of the hard assets right now to be able to use for your future, for your financial future. So whatever you are, real estate is one of the biggest hard assets.
So they say 80% of American population, the wealthy people earn their money and then make an empire through the real estate. Even Warren Buffett, he has a real estate company like Realtor, the business. Actually, belongs to the Berkshire Hathaway. He belongs to Warren Buffett.
He owns that. Sure. So, questions, guys? I'm gonna get closer to see.
Yes. Let's pause a little bit, and then Jose will check any ongoing question on the Facebook. So, if there's anything that we can answer here directly. Do you see any?
Just checking here. Well, I'm gonna say hi to everyone who joined us. There's a lot of people here. There's probably one question over here.
Do you see any questions? Something you can answer directly?
Any question, guys? Running. Okay.
Wow, a lot of people. Thank you for joining this. We are so excited here.
Yeah, pretty good audience. No questions yet, but
because we cover like heavy topic.
Yes, I know that you probably are thinking, what is non-QM?
Yeah, right? Let's a little bit rephrase it.
Just let's recap a little bit. Yeah. Non-QM is a mortgage option. Yeah. It's a mortgage product available for people with different criteria, with different financial profiles, right? Business owners, immigrants, people with low FICO scores, people with bankruptcies or foreclosures, recent foreclosures, so bankruptcies. So, or people who were denied with another lenders. So don't disqualify yourself. Don't disqualify yourself. That's one of the things that we always say, and we will continue saying the same thing. Do not disqualify yourself. Talk to us. Again, Chris is a real estate agent here in Austin, Texas. My name is Jose Puebla. I'm the lender, the loan officer. And if you don't have any questions, let's wait probably a few more minutes. What do you think about the non-QM after we talk about that?
That's because of, thanks to Jose, I learned a lot about non-QM so that I can help better my client. So as I said, realtors, sometimes they only deal with the easy loans. That's fine as long as all the clients who has only that issue. But as I said, not all of the case because of, as I said, the visa status, the work visa status, or limited down payment issue, or the situation of the like a W-2 to self-employed conversion, the recent history, or tax filing. Normally 2 years record is required at least, but sometimes only 1 year. And then I have one customer disqualified by the one lender. And then, but you know what? He got qualified another lender who has another outside of box options, like for example, non-QM or the other program.
Right now, I'm just thinking out loud. There is a program if you live outside of the United States. Let's say if you're living in, let's say Korea, right? South Korea.
Yeah, South Korea.
And if you're thinking to invest, right? You don't have anything here in the United States, but you have some money and you have a business going on in South Korea and you want to buy a property here. We do have a program for foreign nationals. We do have that particular options for you to invest here in the United States and buy a piece of property.
Exactly.
So those programs, that's where is very important for us to talk about it because one, there is probably not many loan officers willing to do those programs.
It's difficult.
Second is because they're difficult, lack of experience, lack of knowledge, and they're just preferring to probably use do the easy loans.
Also, the company has only limited option. As I said, some company has only covering conventional only, FHA only. They don't do any DPA, down payment assistance. They don't do USDA. They don't do any like non-QM. So that's what I'm saying. As he mentioned earlier, don't disqualify yourself. Okay. And, thank you for so this is our contact information on screen and Zoom. And we have an email address, but sometimes they have a question, but they have a question closer to the end session. Okay.
Yes. And I know we totally understand. It happens all the time. The questions are coming after the presentation. We get it all the time. You can reach out to us through Facebook. You're looking at our Facebook page and you can see our names and our information there. Also, Chris, you can share your website.
And then good news is you can Google our name and then we are searchable. And then Jose as well. So you don't really need to remember all the email and cell phone number, but we can post it our website, like a Facebook, my Facebook. We're gonna put this recorded video to our the YouTube.
Yes.
So either you visit our Facebook, YouTube, or reach out to us through the email, cell phone, or just Google search. So many different ways.
Well, Chris, thank you again for this opportunity. Thank you everyone for this time and for the time that you spent during this presentation. Let us know if you want to hear any specific topic about mortgages, real estate, not only in Texas, in any part of the United States or even the world. We can cover different topics. But yeah.
So we're coming back.
Coming back
with the different topics. And if you want to hear anything, want to learn something new, any your interesting topic, let us know. So we will cover it.
Thank you so much, guys.
Thank you so much. See you next time.
Okay, let's.
So is that still ongoing?
Well, at least if I guess.
So many people.
Yes, but it's still on. It's still live.
Okay.
Just 1 second, guys. We're putting all these.
Any questions? Let me see.
Okay, check it out if you have it. If they have any questions.
Thank you, guys. Thank you, guys.